Hi, welcome to this video day. It is the 7th of March, it's Sunday. We're just going to take a look at the USD today, give our outlook and forecast. Got plenty of USD pairs that look interesting in our view. We'll go over to the charts in just a moment. Now, in terms of the USD, into the end of the trading week, it showed decent strength. Will the USD continue to firm, or will the bigger downtrend come in to play? In our view, it's all about bond yields. That's the big fundamental that will drive the US dollar. Bond yields went up last week and that helped the dollar firm. Will they continue to the upside? The market actually is still very short of dollars. Speculators heavily short. I think there's the potential for a big dollar rally. We may get a retracement, but that retracement in our view will be a buying opportunity. Right, let's go and take a look at some pairs, but just before we do so, please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical and sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and you can get live access to our member center. Right, now let's go and take a look at some trade setups. Before we look at the individual dollar pairs, I just want to go over and take a look at what's going on in the bond market. Right, let's go to the charts. Right, first chart is T-Note 10-year weekly. It's part of the bond market, and it gives an indication of the cost of long-term US debt and where inflation could be going in the US and interest rates. Okay, now just for anyone unfamiliar with bonds, if you got the note rising, okay, the yield you're going to get if you invest in the 10-year note is 1.55. That's pretty decent against other G7 country bonds. US bond market is the biggest in the world, and it will attract funds in as the yields go up. That obviously is helping the USD, the strength we've seen in the last week, and particularly the holding above the 150 level. Now, inflation is going up in the US. You can see that in terms of a number of indicators. And of course, this weekend, you've had that big stimulus package passed by Joe Biden and the Democrats. That is really inflationary going forward. We're looking for the bond market to continue to firm. If we get up towards this 2 level, okay, you're really going to see the USD motor to the upside. If the USD has confirmed a trend change, which we think it might have done, there's plenty of upside ahead because the market is just so short of the USD, which I'll come to in a moment. I'll show you the speculative positioning. Now, in terms of this, just the dollar index, you can see the dollar index, DXY, is just a basket of currencies against the USD. We come down really nicely, and we're now seeing some strength. It's a big fall. There could be plenty of upside. We'll look at the individual pairs, obviously, in a moment. Now, in terms of the Federal Reserve, the US central bank, they do not want bond yields going up. They want to keep interest rates low, okay? And what they've been doing to try and keep interest rates low is just print money. You can see the massive money printing that has gone on, and this Fed balance sheet is not far off a historical high. But look at the MOVE index, which is bonds going sharply higher. Right, let's go and take a look at how short the market is of the USD. These are just charts showing inflationary pressure going up, etc. Here we are. First chart is from the CFTC. It shows net long USD positioning. And what you can see is 3 groups. They're all short of the dollar. Quite heavily short historically. You've seen asset managers cover some shorts. Also, non-commercials who are speculators, leverage funds still adding to shorts. So, with such a big short position in the market, the upside potentially for the USD is pretty big. Here's USD positioning shown 2 standard deviations from mean price. You can see how short the market is again of the dollar. Okay, should revert. We shall see. This is an interesting chart, and I put it in a few weeks ago, and I've left it in the member centre because it's the city pain index, and this index is really, really accurate. I'll show it in relation to the euro in a moment. It shows how short the market is of the USD. This is FX funds. You can see them down here, bottom right, and then we have to go to 2011 for a similar reading. And what happened back in 2011? You had a nice big rally, bit of sideways, and another big rally. Come up just slightly. Plenty more upside if shorts exit the market. There's another USD FX positioning chart. Let's find the next one I want, which again is the City Pain Index, but it's the euro only. It shows how long speculative funds are of the euro. And this is when the euro was just rolling over, okay? It's rolled over a little bit more since I put this chart in. But if you look at these previous, big, long positions in the euro had really big falls, okay? They're not insignificant falls, all 500 pips plus, okay? A couple, I think, are over 1,000. Euro's fallen quite hard, but it's going to fall a lot harder in our view. Let's now go and take a look at some individual pairs, and let's start actually with euro. Right, we're on euro USD daily chart, and we've looked at the speculative positioning behind the chart. And that makes you see the chart in a completely different way, or in a different light. You can detect reversals and also measure how far a trend might run. Now, in terms of euro USD, we did have this strong run to the upside. We get above 123. When we got above 123, we're looking at bank, broker, reports, economists, etc. The vast majority were saying we're going to 125, then 127. It's on these reds here, I posted the City Pain Index. And the euro did fall quite nicely, 300 plus pips from the highs. Then speculators come in to buy the dip, and they push it through 122. I'm saying at the time, if we can't hold above 122, the speculative buying is probably exhausted. That did prove to be correct. The euro fell quite nicely to the downside. Now, some speculators have exited on stop. There's still a big speculative position left in the euro. So we're looking for 300 more pips in this trade. We've got near enough, I think, 200. So hopefully we can get down to 116. I've measured or derived my target from how big the speculative position is. If it exits the market or gets hit on stop, we'll get down to 116. Also, if we look at the big fundamentals in Eurozone, very bearish. Lockdown's huge impact, much more so than in the US. US economy is doing better. They're not doing too well with the vaccinations in Europe. And then you can throw in, you've got a central bank, the ECB, with negative interest rates, and bond yields are not as good as the US. Everything points to more euro downside. So we're looking for 116. But I just want to show you the weekly chart, how big the rally has been since May of last year. We're just looking for it to get to the bottom of this blue. But we could, longer term, run on even further. Problems in Eurozone are big. And I think, longer term, we could get to 110. But, we're more than happy if we get down to 116. Right, let's move on to the next chart, which is AUD USD. In terms of AUD USD, our worst performing pair over the last few months. We were way too early in calling for a top, but we got this accelerated move up here and touched 80. Big weekly level. We're going to come in off the level 79.20. This red that follows on, decisive in our view. We try and get back up, double top, and then down to the downside. So well over 200 pips in this pair, but I need a good few more 100 to get back my losses. But I think in terms of the AUD, it's not getting better for the AUD. Obviously, it had a big rise up in response to stock markets being strong, risk on. Stock markets now are starting to top out as bond yields rise. Okay. In terms of the Aussie as well, it has really benefited from the sort of general consensus view that the global economic recovery is going to be really big. Okay. And speculators have pushed commodity prices up in response to that. Now, Aussie is very influenced by commodity prices, obviously, and the main commodity of Australia, its main export is iron ore. Look at this for a rally; it's massive. Okay, well over. Well, it's well over 100%. About 120% if I've done my maths right. This is just full of speculators. Speculators pushed all commodities too far to the upside. If we see iron ore and other commodities break down, that will also weigh on the Aussie. So going back to the chart, I've got 74 and 72 as targets. So if we get down to 72, near enough 500 pips. And the AUD, just very historically overbought. Just look at the weekly chart. AUD USD. Look at that for a rally. So it's not a big decline yet. Longer term, I think we could get down to 70. Okay, but again, if we get down to 72, be more than happy. I'm bearish of all the commodity currencies. And the next pair we're going to look at is actually going to be USDCAD, which is here. Okay, so in terms of the CAD and other commodity currency, I think this move up, that was the exhaustion of selling. And you get this big blue follow on. You come back to test this blue spike tail just through the 126 level, round number, no more sellers, up. Okay, so we've got 4 kind of candles, small, low volatility. The rally was rejected on Friday, but this one is getting ready for a big move, in my view. Take out this high here, and we should get up towards the 132 level, maybe even the 134 level. We've got 130 as a level in between, which I haven't drawn in, but I think market just so short of dollars, we should see 132. So decent risk to reward on this one if you're coming in fresh. You can see we're only risking it to 125.65. Okay, and we're in at 126.20, so it's a nothing kind of trade at the moment. But we get through next week, I'll watch for higher prices. Final major commodity currency I'd look at is the NZD against the USD. Big rally up, and then she rolls over. That red is decisive in our view. We try and get back up, can't. Okay, we're exhausted off the low, but I think we've got resistance at 72. Okay, and then this second level should hold. So if you're coming into this market fresh, you've got a really good risk to reward. NZD background, really a bit similar to the AUD, in terms of its exposure to China, its exposure to commodity price fluctuations. Okay, so AUD, USD, NZD, USD, kind of correlated, which is the best. Can't decide, I'm doing both. And obviously I also like the look of USDCAD. Now here is a pair I really like. I've liked it for a while, but it took a little while to come to fruition. When we were down here at this 88 level, speculators had their biggest short position in over a decade. So we didn't think we would run away to the downside. We do actually move up, took a long trade off the lows, got stopped out, come back in, and look at that. It's a really nice move to the upside. 250 odd pips, but I think we're going to get up to the 96 level. Again, if you look at the weekly chart, you can see just how oversold the USD is everywhere. See, this blue here comes through this 20-day moving average, okay? And this one follows on. I think 96 is on the cards, okay? So, it's had a big move up, plenty more upside. Right, this is the US dollar against the Swedish krona over the last year. Swedish krona has been the best performing currency against the USD. You can see just from October of last year, that massive fall. Then the USD has some strength. We come down. That is the exhaustion of selling for us. Big blue comes up. We're now through the 850 level. And I think we're going to get up to 880, then to 9. Speculators heavily short. And if you're coming in fresh, it's a good risk to reward if we open where we are if we dip back and come off the level. Really like look of USD SEK. Obviously, if the euro goes down, Swedish krona is correlated with the euro. It could go down even quicker. So really like look at this pair. Also like look at USD CZK. This is US dollar against the Czech krona. Big fall, and then you just had nothing action for a while, and now the USD building up strength to the upside. I think, yeah, if we run on next week, we've taken out a significant resistance level. We should get back to chart highs. So really good risk to reward on this one if you're coming in fresh and we open around about the same level that we closed at. Okay. So yeah, so Euro proxies, say it frequently, always look at them. They'll very often give you better risk to reward or more profit than Euro USD. Next pair I'm going to look at is going to be USD MXN, an emerging market currency. Now, in terms of emerging markets, yeah, they benefited from the view that the global economy is going to recover strongly. We don't share that view. We think it's priced in anyway. But the USD does firm up here, dip, and now for us, it's in an uptrend, and we're risking it back behind this body, and we should get up to 22.50. But if we look at the weekly chart, 22.50 is this double top here roughly. I think we could run on up to 24. Okay, now going back to the next pair, which is going to be USD ZAR, US dollar against the South African rand. Decisive blue there, bit of basing. Now we're moving higher. We should get to 17. Again, we could get higher. Okay, so 17, you're basically up at these sort of candles here, aren't you? Okay, so there. But could we get on, even sort of run on to 18? Possibly. So yeah, so I'd like the look of USD ZAR. Where should we go next? This one, a slow moving pair, but I think it's now confirmed a move to the upside. It's USD SGD, so the US dollar against Singapore dollar. Singapore dollar is the most exposed currency to global trade. So we think strong global economic recovery is basically discounted in the price, and the dollar is now moving higher. I think we could get to 138. So yeah, any more pairs? Let's have a look at USD RUB, which is the Russian ruble. And this one's very sensitive to the oil price. And oil price has been on a tear to the upside. What you can see is kind of trapped in a little bit of a range. If we can force out of the range, we should go to 78. We may even overrun to 80. So plenty of USD pairs to look at. I've just picked out my favourites. Keep your eye on bond yields. Also the stock market, looking vulnerable to a correction now. If it corrects hard to the downside, that is going to be a bullish fundamental for the USD. USD just so oversold, speculators heavily short. Yeah, we're looking for USD rally. You might get pullback. That pullback, I think, will be a buying opportunity. So yeah, that is the video for today. Thank you very much for watching it. Take care. Have a good day.